Good morning, traders. It is about an hour before the open on Wednesday, November 22nd. Hope all of you are going to have a great Thanksgiving. We've got a lot to be thankful for. I'm going to talk about a little bit of it from a trading perspective in just a minute. My voice is about to falter. I've been struggling with a cold, so I'm going to keep this video very short. JPM, I like it. This is a longer term play. We're looking to buy some in the money calls because the stock has a tendency to rally into year end, especially when the Fed could possibly be pausing. So I like this play. It doesn't carry a lot of option implied volatility, so we're able to go deep in the money and buy some calls that we're trading fairly close to parity, very high delta of 0.75 or higher. That is what we're looking for. I'm going to continue that same theme. Now we're going to see some rotation into laggard stocks. And going to get into the market as well, but let's take a look at this pick first. You can see how we have the open from Monday right here, and the video came out Sunday morning. So yes, the stock is continuing to grind higher. We can see that on a 15-minute basis. There's your open right in there, and the stock has been able to move up. Very nice. I had another pick that I highlighted. I can't go through all my picks. BAC has done well. Verizon, I told you what to expect on this. This is a longer term swing trade. And on that chart, we had this nice compression right here around the 100-day moving average. Video came out somewhere in here. Yeah, it took a little while for the stock to get going, but we were buying January $35 calls. We got 2 months for this trade to work out. So we don't care that the stock didn't go up today. Now that's how most of my videos have been because the market has been tough to trade from a swing standpoint the last 2 years. You take what the market gives you. And if the market's uncertain and the market is volatile, then you start tightening up your time horizon. You stick with very short-term trades because you don't know what's going to unfold 2, 3, 4 months from now. Lots of uncertainty. Well, some of those dark clouds are starting to part. We've got inflation coming in. The economy has remained strong. The chance for a Fed rate hike has gone down to 0% in December and January based on the last CPI number. These are all good things. These are going to be very encouraging signs for asset managers. They're going to be looking to allocate money. So Verizon, a nice, stodgy, boring, old company, is going to produce some really nice gains for us. Those calls are doing very, very well. When I have to lose sleep at night, this stock is just going to drift higher. That's the kind of play that I'm looking for because now that there is less uncertainty, some of these unloved stocks are going to get some love. Why is that? Well, because this move happened so quickly. So if you're an asset manager looking to place longer term money, you're not going to want to chase. You're going to be waiting for a dip and waiting for a dip and waiting for a dip. Sometimes that dip never comes, and that's what happened. We had this big gap up on the CPI. I had mentioned to you Sunday night that if we continue to hold all of these gains from the gap, what that tells me is that the market is going to move higher and we're not going to get that dip. It has to happen fairly soon. You're going to see aggressive sellers coming in and saying, hey, this move is all fluff. Wham, wham, wham. They drive the price down, they fill the gap, they see this as an opportunity to sell. But into year end, as I've mentioned in my previous videos, there's a disincentive for asset managers to sell. I'm not going to go into greater detail on that. Please go back and watch my previous videos, and I explain why this is. So now all of a sudden you've got asset managers, and trust me, they get FOMO too. They're worried not that they're going to lose money, because asset managers don't worry about whether or not they're going to make or lose money, believe it or not. This is my own personal opinion. They only care that they perform better than their peers and that they perform better than the benchmarks. So if the S&P is down 20%, they don't worry that they're down 15%. They see that as a victory because that's how they attract money. People invest with those who tend to outperform the benchmarks. So in here, they're like, yeah, I want to buy a dip. I want to buy a dip. Well, they never get one, so they don't come in and rush in and buy the market. What they're going to be doing is they're going to be looking to the laggards because they're not chasing there. They feel that they're still able to get a decent value. So that's why I think you're going to see some of these laggards get some love. The market should continue to float higher in here. We're within striking distance of the high of the year. Can we get there? I think so. And if we do, you're going to see even more FOMO up here. Could possibly even break out because those asset managers who have been reluctant to buy in here, you're going to start seeing the volume increase. If we can poke through that, then they'll finally throw in the towel and say, yeah, I've got to have some allocation in here. So the market's going to continue to grind higher, continue to float higher. It can do that on light volume. One other misnomer is that a light volume rally is somehow bearish. It's not. It's not bullish and it's not bearish. It means that until we see that heavy volume, we have to be a little bit more conservative because this has a chance to reverse. And when it starts to break down, we start to see longer red candles, and we know that we've got to start taking gains on some of our long positions. But this rally here could just as easily start gaining big volume, and then it takes off. If you still are having a difficult time understanding what I'm talking about, look at the rally that started to unfold last year. It started on light volume, and then the volume all of a sudden started to pick up. So light volume rallies do not mean short. They do not mean that this is a bearish sign. They simply mean that no one had a chance to really get allocated in here, and they don't want to chase, so they're reluctant. Eventually, push comes to shove, and they do start putting money into the market, and that's when you're going to start to see the volume, and that's when you can get more aggressive with your trading. So for right now, I'm bullish. I am very happy because for the first time in a couple years, I feel very confident that I can swing trade with maybe a 2-month horizon even without worrying about the rug getting pulled out from under me. I haven't been able to do that before. That means that I'm looking for bullish put spreads to sell out of the money on stocks that have high option implied volatilities and have excellent technical support. And I'm looking to buy in the money calls that have a month, 2 months. I like buying calls as far out as I possibly can because then I am less exposed to time decay. And if I buy them in the money, they're going to have a high delta and I'm going to be paying very little in time premium. So the option is going to move pretty close to point for point with the stock. I like a 0.75 delta. And I'm not going to have to worry about time decay. And I'm not going to have to worry that, oh, there's a wiggle and there's a jiggle and the market pulled back a little bit. Oh no, the bottom's going to fall out. I had that worry a year ago. I don't have that worry anymore. Even earlier this year, we saw some pretty stiff selling. How long it took the market to go down? It took us 3 months to go from here to here. It took us 1 month to go from here to here, recover all that. Who do you think is in control here? The buyers are in control, for sure. So we've broken through lots of major trend lines. We're above all the major moving averages. We're above AV, WAP, Q. We're into year end. Everything looks great. So should be a nice holiday season. I'm expecting the market to continue to go higher. I'm just going to go into the same old search. It's one of my favorites. It is Green Royal Flush. All of these stocks are on buy signals from a D1 basis to H1, M30, M15, M5, across the board, we have a buy signal on these stocks. Love this search, especially for swing trading. So we go into the search and we start taking a look at the different stocks that are here. And I find Abbott. So I like Abbott. Abbott is a laggard. You can see this is what the stock has done recently. Well, it's not a stellar performer. You can also see that it's back above this horizontal, was support, then it became resistance, now it's above it, so it's above support, right around that $96 level. I expect it to preserve that $96 level. In fact, I expect the stock to keep grinding higher. Yeah, but Pete, you got the 200-day SMA in the way. Yes, I do. But the stock has just recently cleared the 100-day SMA. And so I view that as being significant. And I believe this could be the opening indication for the stock. Yes, so we're starting to see some overnight price action in here, but the market's not open. So you can see how it's testing that 100-day moving average. Yes, that's the 200-day moving average. So with a choppy stock like that, how do I trade it? Well, first, I want to see Abbott preserve that 100-day moving average. That's critically important to me. It closed above it yesterday, so no, I'm not looking for it to challenge it and to get a long red bar in here. If I see that today, it's going to tell me that this is not support, that is resistance. Wappa, wappa, wappa. You might want to break out, but you're not doing it yet. So we'll see what the market does today. If the market's up today, I'd like to see Abbott hold that 100-day moving average and close above it. If it can do that, then I want to see it attack that 200-day moving average. And I believe it's going to. So if we're trading seasonal strength in the market, and if we're looking for laggards to get some love in here, what else would be important for us to take into consideration? Well, Abbott's a very stable company. It's a boring company. They've got a lot of healthcare products. They've got some drugs. They have COVID testing kits. Okay, well, I think that should keep everybody engaged. Everyone gets together in November, December, and New Year's, and so COVID starts to pop up. Everybody needs test kits. Maybe it's the cold that I have right now that has me thinking this way, but that's about as deep as I'm going to get into the fundamental analysis because I really don't need to go fundamentals here. But it's a stable, good company. Those are the kind of companies that are getting love right now. And I checked to see what the seasonal bias is for Abbott in December. Well, guess what? The last 4 years, it has drifted higher in December. Cool. I have enough information. I like all the technicals behind the stock right now. Want to make sure the 100-day moving average is preserved. But you don't have a lot of room for the trade to run, Pete, because it got this 200-day moving average up here. I'm going to let it get up to that 103 level, and then I'm going to see what the stock does. It'll probably sit around, just like this, and eventually poke above it and continue to grind higher. So I want to give myself plenty of time on this trade for it to work out. And so we're going to go out 2 months, and we'll go into a January expiration. You can see the $95 calls right here on Abbott. And the stock closed yesterday at, I think, 102. So these are roughly $7 in the money, and I'm having to pay about $1.50 in time premium for 2 months. What is my expectation? My expectation is that the stock should be able to get back somewhere around this 105 level. Well, if it's able to do that, those options intrinsically without any time premium should be worth about $10, perhaps even more. So that's going to generate a decent return. And I'm not looking for the market rug to get yanked out from underneath me, which incidentally, you can see that the stock has been able to move higher for quite a while. I mean, this low that was put in by the stock was way back here, and the market has made this type of move just recently, you could see the stock has participated. So I like this call play, but I want to make sure that the stock preserves that 100-day moving average. This is the most important thing right here because I want to know that buyers are interested enough to buy right here, that they push, push, push right through. Check is going to be instantly gobbled up because they see this as an opportunity to get long. So, yes, I like buying those $95 calls. Be patient. This is a pre holiday trading environment. Thanksgiving is going to dry up the volume today. It's going to dry up the volume on Black Friday. Incidentally, sometimes the market rallies on Black Friday, usually gives those gains back on Monday. Sometimes the market sells off on Friday. It usually rallies back and erases those losses on Monday. So whatever happens Black Friday usually gets reversed Monday. At least that's been my experience. So it's kind of a non-event. So then we start getting into normal trading when we return next week. And yes, keep an eye on Abbott. Keep an eye on this 100-day moving average. We want to see that close above it. If the market sells off a little bit today, we want to see Abbott stay above it. If the market is up today, we want to see Abbott above it. Watch for that relative strength during the course of the day today and Friday. Maybe it takes until next week, Tuesday or Wednesday. This is a longer term stock that you want to have on your radar, looking for a little bit of a year-end rally. Buy those deep in the money calls that have a very high delta. You don't have to worry about the market rug getting pulled out from underneath you in the course of the next month and a half from here until year end. I'm certainly not expecting to see that. Could we see a little bit of retracement in here? Perhaps check this gap right in here? Sure. Is that going to throw us into a tailspin? I don't think so. I think that any pullback in here is going to attract buyers because they are looking for any opportunity that they can get to get long, because the chance of the Fed hiking has been reduced. Everyone, I hope you have a great Thanksgiving. Travel safe. We will see you. I'll perhaps do a video Sunday evening and we'll take a look at Abbott then and see how it's performed. But just make sure that it has relative strength. Stay safe in your travels. A lot of you are getting out on the road early right now, so I wanted to make sure that I got this video out as soon as I could this morning. Thanks so much for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.